Hi, I'm Frank Notaf, Chief Economist at Freddie Mac. Well, last year was a good recovery year for the housing market. The key to another good recovery year in 2014 is jobs and income growth. The January labor market report, though, was a bit lackluster. Only 113,000 jobs created in the economy. That was less than the monthly average of 194,000 jobs per month that we saw in 2013. So the key for another good recovery year for the housing market is a pickup in jobs growth and income growth, and we expect that to come to pass. And it's not just us. The Federal Reserve thinks that as well, too. And that's why they've announced that they're going to continue to taper and scale back their purchases of long-term Treasury bonds and mortgage-backed securities in the marketplace. And with that, we think that over the course of 2014, we'll gradually see some upward pressure on interest rates, and we'll see fixed-rate mortgage rates rise and be higher at the end of 2014 than they are right now. And where are they right now? Well, they're very low. In fact, over the last month, we saw fixed-rate mortgage rates come down about 0.3 of a percentage point. And the main reason was that investors in capital markets saw a good opportunity to invest in long-term treasuries because of the safety of those securities, and that helped to bring yields down over the last month. So mortgage rates are very low, and if you haven't refinanced yet, there's still a great opportunity to take advantage of refinancing opportunities. We estimate there's over $800 billion in single-family mortgages that are outstanding in the U.S. with a contract interest rate of 5.5% or greater. Now, mortgage rates right now are right around 4.25%, 4.5%, so you can save over a percentage point refinancing at today's rates if you've got a loan that's 5.5% or greater. And in fact, in the fourth quarter of 2013, those borrowers who came in and refinanced at that time will be saving $3,000 a year in mortgage interest just because they refinanced last quarter. And you may be thinking, oh, I've had my loan 7 years or longer and everything's fine. I don't need to come in and refinance. The borrowers who came in to refinance in the last quarter had their mortgage on average about 7 years or longer. So even if you've had your loan a long time, if you've got a high interest rate, take another look at the rates available today in the marketplace, and you may be able to save yourself $3,000 in the coming year in mortgage interest. Now, with rates still low, we expect to see a pickup in housing activity. And indeed, the latest sales data weren't so robust. I think that has a lot to do with some of this inclement weather we've had throughout the 48 contiguous states. A lot of ice, a lot of snow out there, and that usually dampens home sales activity. But as we move toward the end of winter into the spring home buying season, we expect to see a pickup in home sales, especially with mortgage rates at these very attractive levels. So if you're considering home buying or refinancing, take advantage of the opportunities today while rates are low, because we do expect rates to rise gradually over the course of 2014 and be higher at the end of the year than they are today. Well, thanks for your time. Look forward to seeing you next month.